What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. It's been a rough couple of weeks inside of the market, especially with the China news, commercial real estate, Evergrande, bankruptcy. A lot of bad news has been hammering the U.S. markets right now, and earnings haven't really been that bad. They just been, modest. So I think we have a good buying opportunity, especially inside of fintech. You've seen those companies like PayPal, Robinhood, SoFi, Lending Club, Coinbase pretty much all have the same type of pullback in the 20 to 40% range, regardless of what type of earnings each company has had. So this is definitely a buying opportunity in my personal opinion. I believe mega caps still need to cool off more. But the good news is we did have about a 9% correction inside of the NASDAQ, which hasn't happened in a long time for 2023. And a 10% is basically a mild correction inside of the market. So we're going to be covering the SoFi stock. So as you guys can see in the title, we are going to be covering the Federal Reserve updating the U.S. banking rankings by assets, and we have some great news for SoFi we're going to be covering in this video. If you find any of this information useful, be sure to smash the like button. Let's try and get the video over 1,000 likes. Don't forget to drop a comment. Have you been buying the SoFi dip? What other companies are you looking at right now? And don't forget to subscribe to the channel. Let's try and get the channel past 15,000 subscribers. We got a lot of information to cover, so let's get into it. All right, guys, check this out. This is the last video I did about 2 months ago. The Federal Reserve updates these banking assets at the end of every quarter. It looks like about a month and a half after the quarter ends. So we could see we had SoFi at 114th ranked by assets for Q1. And a lot of people I remember inside of these comments on that video, is SoFi going to be able to break into the top 100 next quarter or by the end of the year? So a lot of people were looking for a top 100. We're going to be covering inside of the video today what really happened. And guys, it was extremely bullish. And like I said, there's just been so many bad headlines inside of the market, with China and stuff like that. Credit, real estate, the list goes on. It's really been hammering companies that had good earnings. And I believe SoFi scaled its growth to have a profitable quarter by Q4. So let's get into it. All right, guys, you can see here on my Twitter. If you are not on my Twitter, guys, go follow my Twitter. It's at Kyle White Goat. The Stock Goat Twitter, and you can see, guys, we got 26,000 impressions on this tweet. So this was a really good tweet that people were excited about. You can see breaking news: SoFi jumps 24 spots from that last video that I just filmed, ranked 90th in bank assets in America, coming in at 17.7 billion. So we'll click the post right here and you can see SoFi is coming in at number 90th right now. 17.7 billion assets. I know their assets were like 20 billion plus, so I don't know exactly how they get this calculation, but these are the calculations we're going off of right now for Q2. But guys, this was a 24 spot jump. This is a bank growing at extremely fast rates, guys. There's no telling how fast it's going to be until we, break into the top 50 potentially by next year. It's a possibility. And here is another tweet I did, guys. We got about 16,000 impressions on this tweet. You can see this is SoFi's asset ranking in American banking. And just starting out at about Q1 2022, so this is 5 quarters ago, we were ranked 449 right around when we got the bank charter. And then you guys could see we just jumped up 200 spots out of nowhere to 240, jumped up another 60 spots in Q3 to 184. Q4 2022, we jumped up another 35 spots to 149. And Q1 2023, 114. And now, guys, we are in the top 100. This is absolutely awesome. We are skyrocketing our assets right now, and that's what we need to continue to grow, our market cap, our lending, everything, guys. We need more assets. We need more deposits. We need it all. And it's just a matter of time before we crack the top 50, in my personal opinion. To get into that top 20, it is insane. I mean, these are companies that have been around for 100, 200 years building up assets. So it's going to be a while until we crack like the top 20 for assets alone. But you don't necessarily need massive amount of assets, to get a higher market cap. I mean, you can get a crazy premium valuation without, these outrageous assets of trillions, like a JP Morgan and a Bank of America and stuff like that. So it's good, but it's not everything, okay? But you guys can see here the last 2 quarters we had about 13.2 billion in assets for Q1 2023, and we grew it to 17.7 billion in assets. That's a 4.5 billion increase in assets. So assuming we can continue to hold this 4.5 billion the next 2 quarters, you can see for Q3 2023, that would jump us up to the 78th spot at 22.2 billion. And then Q4, the same 4.5 billion increase, that would jump us up to, for Q4, to 70th. Okay, as you can see, it's continuing to slow down. Okay, we're not going to get those 25 and 20 spot jumps anymore, but still continuing to jump almost 10 spots per quarter. That's absolutely huge, guys. And this is just if we continue to grow by 4.5 billion. I think if we go profitable, we get our student loans back, continue to grow Galileo. I mean, we could be growing assets by, like 8 billion. And if we get rates to actually come back down, we could be growing a lot faster, potentially by double this, 10 billion possibly. So just remember, guys, this is just, going off of what we just did last quarter. This would grow us to the 70th spot by the end of this year, guys, getting our first profitable quarter. That's not bad at all. Growing, 10 spots per quarter. And this right here is just for fun, guys. Assuming we just hold the 4.5 billion increase per quarter. I mean, this is, just the exact same growth since Q2. I mean, I'm saying we do this the entire next year. I think this could easily double potentially by some quarter next quarter. But let's just assume we do the same type of increase. This would bring us to 60th ranked position at 31.2 billion in assets for Q1 2024. Same type of growth, 4.5 billion. This brings us to Q2, 57 spots. So as you guys can see, that was a slow growth right there, only 3-4 spots, 35.7 billion. Q3, the exact same growth. This will jump us up another 7 spots to 50th at 40.2 billion in assets. And then finally, the end of next year, same type of growth. We're not, going crazy bullish at all, saying double this. This will bring us to the 47th position in banking, 44.7 billion in assets. So guys, assuming we can just maintain this exact same type of growth in the next 6 quarters, we will be 47th ranked bank by assets. Okay, so that's pretty insane, going from 450 to potentially top 50 in as little as, what is that, 2 years, 2.5 years? That's not bad, guys. That's insane growth. It's just a matter of time. I mean, if you compound this at another 5 years, 10 years, where are we going to be at in 5-10 years? We're going to be in the top 10 for sure. But I'm just showing you, just looking out a little bit to next year when we actually become a profitable company. We're going to be breaking into the top 50, just holding this type of asset, growth. And I think this is going to be going a lot faster. I mean, maybe assuming we do get a double for next year, we could be in the top 30 or top 35 or something like that. So understand, this is absolutely huge, guys. This is a real bank growing its assets extremely fast. And we just need to be patient and wait for SoFi to pull that profitable quarter that we've been waiting forever for since they went public as a SPAC stock. And yes, guys, we did get a 9% correction in the NASDAQ. And about a month ago, that's the entire sell for about 4 weeks. We are at 83, which is extreme greed. You can see in as little as 4 weeks, we pulled back to almost in the fear column. We're barely hanging on by neutral because of those China headlines. We still got some earnings coming up, like a NVIDIA. If that, tanks 20%, we're going to be in the fear column and we're going to be having some great buying opportunities once again. Of course, I'd like to make our way maybe next week a little bounce into the upper end of neutral, potentially getting back into the greedy area, because a 10% correction is pretty, bearish, dropping 10% on the NASDAQ. So as you guys can see, we were right here 1 month ago, and now we are right here after that 10% correction. If you made it to the video, I want to say I really do appreciate it. I enjoy doing these videos for you guys. Be sure to smash the like button if you enjoyed the video. Don't forget to drop a comment, and please subscribe to the channel if you are not already subscribed. This has been a nice pullback inside of the market for the last 4 weeks. Of course, we can get another couple of weeks of a sell-off, but understand we did hit about a 9% correction in the NASDAQ right now, and mega caps still need to pull back more. And I believe, the small mid caps and especially fintech have had a drastic sell-off in the 20 to 40% range, which can't really justify companies like a SoFi that had a solid earnings. So remember, guys, there's always going to be buying opportunities in the market, and we know what SoFi's goal is. They want to be profitable in Q4. Once again, my name is Kyle. Hope you have a great day.